Hello, today is Wednesday, 17th of October, and for today's market update, I want to focus on indices. As you can see here, I've got a US 500 daily chart up, and you can see yesterday that we got a pretty impressive recovery in this market. The market rallied around 2% from lows just below 27.50, back up above the 2,800 level. Looking at the market longer term, you can see after last week's strong declines, we have recouped a fair chunk of these now. And in terms of near-term resistance, an area to look for is possibly 28.24. If we do overlay an Ichimoku cloud, this is also quite an interesting level potentially. You can see after breaking down through the cloud last week, we are now back testing the lower bound of that cloud. You can see the lagging line has broken back above the cloud, and both these lines here, the turn and the signal line, are now placed at price. So this could be quite important to see how we react from here going forward. Now, the recovery in the US 500 was really led by tech stocks, and to get a better picture of tech, you can look at the US 100. You can see yesterday had a much bigger rally, 2.5%, almost 3%, and the market soared back up after getting back above these highs around 7,218. Looking back at previous corrections that we saw earlier this year, I pointed out in last week's video that we saw two 13% drops, the first at the back end of January and into February, then a couple months later. If this is the end of the selling, from the highs that we saw just a couple of weeks ago to that low of 6,908 is an 11% drop, so it's slightly smaller, with a 13% drop would come in at 6,722. In terms of levels to look for here, possibly 7,400, which is the high of the day last Wednesday, or the open of the day, last Wednesday, where we sold off strongly from. And if the market can get back above here, then the outlook becomes more positive. After last night's closing bell, we got more good news for the US 100 with some strong results from Netflix. Netflix now is higher than expected new customers and subscribers, and there was a strong move up in the stock after hours. So today the market is called to open around 10%, a little over 10% higher, somewhere in this region around 386, and this has boosted the US 100 after last night's 9 o'clock cash close. You can see going back, however, that earnings moves can be sometimes short-lived. This was the previous update 3 months before. You can see the market dropped heavily, but it actually recovered a lot in the following day. So it could be quite telling to see how Netflix, as the best performing FANG stock this year, performs this afternoon when it opens at 2:30 our time here in London. You can see, just going back to the start of the year, how well the stock has performed after trading down around this 200 level. It's a very strong move higher, and even though we have pulled back recently, the stock is still sitting on pretty big gains. Finally, in the US, I want to talk about the US 30. When you have a big decline like we saw last week, fib retracements can offer potential levels to keep an eye on. You see taking a fib from the highs here around 26,955 to those lows. Yesterday we break above the 38.2 fib, which is potentially positive development, and this is the area now to look for potential support around 25,681. If we do hold above here, then you can look for a further recovery up to the 50% and even potentially 61.8% at 26,168. Turning our attention to Europe, we saw a big update for the DAX yesterday. You can see the D30 here got back into this region where we broke lower from last week, but unless we do see a move above 11,930, then this recovery could prove short-lived. In the positive side, we did close above 11,710, and this is possible to support to keep an eye on, but unless we do get back above 11,930, this market does remain under pressure, and we could see another push down towards these lows around 11,395. Big picture, we still have a fairly messy possible head and shoulders forming here, although the neckline now is quite confusing and muddled after yesterday's price action, and these lows here around 11,395 do coincide with some lows seen at the back end of 2016. Looking at the wider Euro Stoxx 50, you can see we did have another recovery yesterday. The market pulled back up to the 38.2% fib of this latest leg lower, around 3278, but it has been met with a little bit of selling this morning, and we are pulling back down from there. Comparing this correction to the previous correction that we saw at the start of the year, you can see that the market, after making the lows here at 3256, recovered fairly well, got back to around the 50% level, but then it did pull back down lower and retest those lows before a better recovery could happen. So if we do fail to break above this 38.2 with conviction, then we could be set for a drift back down lower into this now potentially key support around 3170. Finally, the UK 100, it's a little bit of an odd one out. Yesterday, whilst we did have a fair sized gains, the gains were smaller than those seen in the D30 and also across in America. The market does still remain under pressure here, I think. The market is below the 8 EMA, which is this blue line, and well below the 21 EMA, and they do remain in a bearish orientation. In terms of events today, the EU summit kicks off, and if we do get any Brexit developments, this could have an impact on the UK 100 through the moves that we'd see in the pound. So this could be something to keep a close eye on going forward. Okay, thanks for listening, and best of luck if you're trading these markets today.